start.
Good morning, everyone. Good morning, Tony. We're gonna have this Fireside Chat today, and I'm gonna be your moderator. I'm Sharon from G.H.Financials Hong Kong Limited. Today with me is my distinguished guest, Tony C. from TMX Group. Tony is actually serving as the Executive Managing Director for Asia for TMX Group. It might be a little bit too hot at this hot summer for me for fireside talk, but I'm pretty sure the topic going to be interesting to you because it covers a lot of hot topics. Okay, Tony, how are you? It's great to see you again.
I'm good, thank you. Thank you for having me, Sharon. It's nice to see you again. And you're right. I mean, this is a time of well, we want to talk about globalization, but it is also global warming, right?
Absolutely, absolutely. Yeah, speaking of our subject today, we're gonna, as you mentioned, Tony, we're gonna talk about globalization of risk management. You know, I was listening to your contribution to a panelist as a panelist from another event I moderated a few days ago, I guess. So I'm quite interested in that and would like to know a little bit more about that. But before we kick off, Tony, would you mind just give a very brief introduction of TMX Group, your organization, who you are, what you do, please?
Certainly, absolutely. I mean, for those in the audience who might not know who we are, TMX Group is basically the Canadian public exchange group in Canada. We own and operate equity and derivative exchanges in Canada, such as the Toronto Stock Exchange and the Montreal Derivatives Exchange. We also operate the clearing and settlement agencies in Canada, and we run a global commodities platform called Tradeport out of the UK and a variety of data and trust businesses. Myself, as you mentioned, Sharon, I look after our Asian operations. I've been with TMX a couple of years now, but my background is, from the investment banking side of things. I've done 20 years in terms of global FIC sales and trading, primarily with Royal Bank of Canada around the globe, but also with the likes of Goldman Sachs and Jefferies.
Thank you so much. So I do have an expert on my stage. So welcome to my panel, welcome to my talk. Okay, you've certainly been in my panel a lot of times. Okay, great to see old friends again. All right, Tony, why don't we just kick off a little bit on the subject, basically, by globalization of risk management. What do you actually mean? Could you please just give a little bit color on how you actually address that from your organization point of view, please?
Well, certainly. I mean, Sharon, I think you and I've delved into this a number of times, as you mentioned. I mean, it's certainly a theme that really encapsulates, many of the trends that have taken place in the world of investing and funds flow in recent years. And it's a topic that I love talking about because it's something that we see all the time. Particularly with regards to the globalization of pension funds and investments that's impacting all markets and us in Canada in particular in the past few years. I mean, historically, Canadian pension funds have for many years led the way and have been pioneers in that space. But, it's had a negative impact on the movement of capital out of Canadian capital markets. But what's great for us is now as Australian, Japanese, Korean, and many of the other Asian pension funds and life insurance companies start to grow out of their domestic markets and are looking for greater international diversification. Canada has been a beneficiary. Look, international net investment flows into Canada in the past year has been incredible. It's been a steady growth. Net inflows into Canadian cash bonds, for example, has been positive from international investors, for 10 months straight, particularly out of Asia Pacific. There's been almost inflows of, it's pretty close to 35 billion Canadian dollars just out of Japanese investors alone. So, this is what I mean by globalization. And from that standpoint, investors need access to better risk management tools. They're looking for ways to access all markets. But first off, I just want to make mention that diversification of investors into any market as a result of globalization is a positive development, right? And it creates more efficient markets for all of us. Certainly adds to liquidity, brings different investment viewpoints to the market, and creates better conditions for capital creation.
Absolutely. Sorry.
Yeah.
I was just while I was listening to you, I was just wondering. Well, it's great to hear that the Asian investors, like they say, those institutional investors. And I thought Asia is more on the commodity or equity side. It's very encouraging to hear you saying that there's a greater inflows into Canadian fixed income markets, because I thought the Asian clients are still sort of developing themselves to that asset class. It's great to hear.
Yeah, historically, even in my own career, I used to see a lot of the Asian central banks and sovereign wealth fund flows that were going to Canada. But, I think it's very different now. We're seeing much more in terms of asset managers, in terms of pension funds, in terms of life insurance companies. So it's gotten more diverse in the types of investors that are looking more globally. And people are looking for more efficient ways to trade the various markets. Hence you've seen, both of us have seen a growth in terms of 24-hour access to global exchanges. Both ways. We've seen JPX go to North America. We've seen Eurex come into Asia. And certainly there's been the growth of exchange-traded derivatives, in particular, in part because of that need for standardization and prudent risk management. And that's something that we want to try to do at TMX Group now.
Okay, that's great to hear. So I would like to know, since you've been talking about all these great ideas and initiatives, I'm pretty sure your organization have done tons of work around that topic to make it happen, to actually address the needs of those investors, as you mentioned. So could I know a little bit more about what has been done so far and what we are expecting next, and so on and so forth?
Absolutely, Sharon. We've been a bit late to the game. Historically, Canadian markets have been more domestically focused. We've had, thankfully, very large and liquid cash bond markets. So from an exchange traded derivative perspective, we haven't had to address some of the needs, but certainly that's changing. In the past 3 years, we've tried to address that, the needs of our investors, in particularly trying to expand our trading hours. Historically, it's been difficult for global investors to access our markets. From my sell side days, I know a lot of investors and sell side firms used to have to utilize US Treasury futures to meet their hedging needs and then unwind those during North America trading. But starting from late 2018, we expanded our derivatives trading hours to Europe and had some phenomenal success there. It's opened our eyes to the needs of a greater set of investors. As a result, we've added more products to build out our yield curve because of some of that demand. And certainly since that time, extended hours trading into our exchange products now represent 6 to 10% of our overall trading volumes on a daily basis. And given the globalization trends that we just talked about out of Asia in recent years, we're looking forward to opening up Asia trading hours as of Monday, September the 20th.
That's only a couple of weeks away, right?
Correct.
So congratulations and good luck.
We're very excited by that. Thank you. And as you say, we've done a lot of work in terms of making sure our systems are in place. our settlement systems, our clearing systems. So, kudos to a lot of the folks back in our Canadian offices that have put in that work and effort. And certainly we are also engaging market makers in the Asia Pacific region. We will be naming a number of those in the coming weeks who will help support liquidity into all of our products, both our fixed income bond futures as well as our equity derivative futures.
Yeah.
Sharon, look, it's going to be a big challenge. Our goal, is to certainly address the needs of the risk-taking needs of our clients in Asia. It's one of the biggest growing markets for exchange traded derivatives. But many of the regional banks and central bank reserve management groups still don't utilize them. They're still utilizing OTC swaps and the like. So there is potential for much greater growth as well. But,
great. Sorry, please.
No, I was just going to make mention of the fact that it's an exciting time because for investors, it allows them not only to better access to our markets, but it gives them, it enables them to look at relative trading opportunities against, markets such as the JGB market or the Aussie bond market, things that weren't possible for them in the past.
Absolutely, it's certainly a fantastic opportunity for the global clients, not only the Asian clients to actually, I'm not going to say cross-market arbitrage, but certainly they have more choices for allocate among their portfolios. That's great to hear. Tony, would you tell us a little bit more? What products probably will be available during your Asian trading hours? I'm pretty sure you have been communicating this message to your clients and even prospective clients in advance, and you probably heard a very positive feedback already. So what products we are expecting? Anything you think would be particularly interested to our Asian investors?
Absolutely. Sharon, it's going to be primarily our headline products, the most liquid and most accessible products that we can offer, which is our fixed income derivatives, right? Not only our STIR products, such as our BAX futures for this front end, but as well as our 10-year bond futures, our 5-year bond futures, 2-year bond futures, our Toronto Stock Exchange Composite Index equity futures, as well as what could be of interest for Asian investors is our ESG futures. Certainly with the increased interest for that space, having access to a Canadian ESG, position could be of great interest to Asian investors. But I think the most interesting part for those in the Asia Pacific region is to be able to now manage their portfolio risk better in terms of event risks that occur during local time. And Sharon, as you mentioned, we've been planning this for many months, but oddly enough, just in the last little while in mid-August, the Canadian government has called for a federal election to take place on September 20th. So, so our launch date into Asia trading could be quite an eventful day. Our second day on the 21st of local time in Asia, we have this election taking place in Canada evening.
Good for you. Yep. We used to have clients trading the 90-day bank bill and 10-year Aussie bond yield market, both of which are very liquid products. And it's great to hear that you're adding the 2-year, 5-year products as well. So the clients could actually trade along the yield curve. That's all great to hear. And ESG futures, it's definitely a very hot topic to hear. Thank you so much.
Thanks, Sharon. It's pretty exciting because as you mentioned, we have filled in the curve, and that allows for people to look at the relative value against all the other curves in Asia. And so we're very excited to be able to bring Canadian markets to Asian Pacific investors and certainly give regional investors the opportunity to trade our markets during their local times.
Absolutely, absolutely. Likewise, I'm pretty sure all the Asian investors, especially institutional investors, going to be quite look forward to your new products launching and Asia trading hour expanding. Thank you so much, Tony. I'm very conscious about timing, so I'm gonna have to wrap it up here. Thank you so much for being with us today, and it's great to see you again, by the way. And I hope to be able to see you in person next time during a panel discussion. Absolutely. Thank you so much. Okay, Likewise. You take care, Tony. Bye-bye.
Bye.